Take off your clothes, let's do it for the love. Song get your clothes and feel my warmth. No to the phone, come walk to the door. Give me fortune, we can play like a dummy. Say the way that you whine it, girl. I can't believe how I'm lucky, girl. Come on, mood, don't you mind it? You love me, no way did you want it, baby. Baby, give me love for tonight. You got me tripping every night, me stay for the night. Walking a good summer love. It takes over me, my soul and my mind. I need a king, baby girl. I wanna give you love, it feels so right. And in the meantime, you hold my heart. Just don't forget who you are. Nobody, baby, let me turn the lights off. Nobody can give you love I have for lifetime. Nobody, baby, let me turn the lights off. Nobody can give you love I have for lifetime. Nitangangana, na kama bado tai nitakazana, yeah, yeah. Nitapambana, na kama bado tai nitapull over, yeah, yeah. Just hold me tight, I move you right. Nita feel so nice. Move your body, nikona Monday. I will spend on you. Find it a fight, kama kuna msana waste time. Take off your clothes, let's do it for the love. Song get your clothes and feel my warmth. No to the phone, come walk to the door. Give me fortune, now we can play like a dummy. Say, nobody, baby, let me turn the lights off. Nobody can give you love I have for lifetime. Nobody, baby, let me turn the lights off. Nobody can give you love I have for lifetime. Nobody, baby, let me turn the lights off. Nobody can give you love I have for lifetime. Nobody, baby, let me turn the lights off. Nobody can give you love I have for lifetime.
Alright, tell me if you can hear me on the comment section.
Take off your clothes, let's do it for the love. Song get your clothes and feel my warmth. No to the phone, come walk to the door. Give me fortune, now we can play like a dummy. Say the way that you whine it, girl. I can't believe how I'm lucky, girl. Come on, mood, don't you mind it? You love me, no way did you want it, baby. Baby, give me love for tonight. You got me tripping every night, me stay for the night. Walking a good summer love. It takes over me, my soul and my mind. I need a king, baby girl. I wanna give you love, it feels so right. And in the meantime, you hold my heart. Just don't forget who you are. Nobody, baby, let me turn the lights off. Nobody can give you love I have for lifetime. Nobody, baby, let me turn the lights off. Nobody can give you love I have for lifetime. Nitangangana, na kama bado tai nitakazana, yeah, yeah. Nitapambana, na kama bado tai nitapull over, yeah, yeah. Just hold me tight, I move you right. Nita feel so nice. Move your body, nikona Monday. I will spend on you. Find it a fight, kama kuna msana waste time. Take off your clothes, let's do it for the love. Song get your clothes and feel my warmth. No to the phone, come walk to the door. Give me fortune, now we can play like a dummy. Say, nobody, baby, let me turn the lights off. Nobody can give you love I have for lifetime. Nobody, baby, let me turn the lights off. Nobody can give you love I have for lifetime. Nobody,
So we're doing this. Tell me in the
let
comment
me
section if you're
turn
locked
the
in.
lights off.
Tell me in the comment
Nobody
section
can give you
if you're
love
locked
I
in.
have for lifetime. Nobody, baby, let me turn the lights off. Nobody can give you love I have for lifetime.
We have Junge. So I'll be starting out right away. So just to start, let me start with you. US30 and what I expect, and what is happening. So if we only start from the higher time frame, so that you build our narrative. You remember that if you don't trade, if you don't use the high time frame, your narrative will be messed up. So what do we see? What do we see? What do we see? So we had some sell side liquidity inside this weekly key level. You see it? And from yesterday, price has been disrespecting bullish key levels. So we have this sell side liquidity on weekly time frame, sell side liquidity. Price has taken it out, which inside the key level. This is a weekly fair value gap that is supposed to push prices higher. Remember that if I use my gun box, let me see. So Arizona, welcome Arizona. Huge, your backup merchants. Yes, welcome to my stream. Today's on Friday. So if you check, what do we see here? So we have this fair value gap that is here, and we have sell side liquidity that was taken out. So if you're keen to check, yesterday price was disrespecting all bullish key levels. You understand that was the last day of the month, and today is the first day. So as you can see now, currently what is happening, price is at the upper quadrant of the fair value gap. This is how I start on high time frame and then narrow down to the lower time frame. So you can see price has reacted, has reached, is reacting from the upper quadrant. So maybe from the 0.5 would have been better, but still we are still reacting from here, knowing that we took out sell side liquidity. What else do we see? You see there's an order, there's a breaker here that price reacted from previously. You see, so you see the breaker, the main threshold of the breaker aligns with the 0.5 level, or the consequent encroachment of the fair value gap. So those are the levels on weekly. So the weekly doesn't give us the narrative, okay, the bias, but it assists to make sure that you're not on the wrong side of the price. So Sports Arena, it's good to have you back. I hope you can hear me loud and clear. You can tell me if the music is off so that you don't have confusion. Thanos is going to be joining us later or anytime. So as you can see, price is currently reacting from the upper quadrant of the fair value gap, and I want you to know that price has been disrespecting the bullish key levels. That is something that is very important to note. And still on building the narrative, you can see there are some fair value gaps here. There is an unfilled fair value gap here. There is this fair value gap has unfilled. So price might come down here, but now because we are having macros at 9:30 delivery, you are going to see what's going to happen, because we've cleared this sell side liquidity, so we should be going up a bit. So so when you check daily, the body yesterday the price was telling us a certain story. Just to show you, yesterday when the price took out the PDL, this is for the guys that trade CRT. So the body closed below, so it means today. So X, Y, Z. So it took out sell liquidity and closed below with a body. That means the story is we were supposed to continue bearish, and we have delivered to the DOL. You see the swing low that is inside a key level here. So that is why you're expecting some type of a bullish price action. But you see, we also have these unfilled fair value gaps here. So we need to wait and see by the time by 9:30 delivery what happens, what exactly happens. And then what do I see? All right, we have gold back. We can hear you loud and clear. So stream as usual. Cheer movies. Welcome to my stream, everybody. I appreciate you for being here. It's a learning session. Remember, today is the last day of the week. We've had some very beautiful trades apart from yesterday that I didn't take a trade. So I'm just waiting to see what happens. So on 4 hours, there's a story also of Asteria's down close. I mean, the body is so strong on 4 hours. So I'm waiting to see what happens. So for me, it's just wait for 950, see what happens. But just to be clear, this is what happened. The price shifted bullish after taking out the previous week low, and it happened quite early. So after NFP, what happened? NFP was a retracement into a key level. So now, if you are supposed to shift bullish, the conditions for buying on lower time frame were this. You see these up close candles before, or all this. You see the up close candles before the price went bearish. So these were our breaker. I know a couple of you are still not understanding what breaker is. So we have this sell side liquidity inside this K level. It was taken out. So we're still waiting to see what happens. I was still expecting price to come and sweep it. So if you're supposed to continue higher, which I'm not sure because of yesterday's candle, but still remember we've taken out a major sell side liquidity, which is the previous week low. Yeah, or a weekly low. So we are supposed to continue higher and Q kindly. Yes, I'm going to check that just in a few. So what I do is if I'm supposed to have trend continuation, I can check 15 minutes. So I'm supposed to have trend continuation. What do I see on 15 minutes? If I'm supposed to continue higher, I have this sell side liquidity that is here. If you see it, this is it. The one that retraced inside the breaker. And then we have this value gap over here, which became an inversion later, and price is respecting it. So let me see if price takes out this one and decides to go higher, or we continue lower. But if I'm supposed to follow my system, I'm supposed to be buying. If my system it works, I'm supposed to be buying because of the liquidity level that was taken out. So 46 people locked down. Billy Shelley. Eh? Or we get wrecked. Yeah. Yeah, if you don't get careful, you're going to be violated seriously. So I'm waiting for price to take out this one. So this is before the market opens. You're just checking. So let's check Nasdaq. Nas 100, see what's happening. So Thanos is going to be joining us. He told me that he's not going to miss today's stream because yesterday there's something unfortunate happened with his internet. So let's see what happens. Remember, today is the first day of the month. Those people know that there is the monthly power of 3, the accumulation, manipulation, distribution. So if the month is supposed to go bullish, maybe you expect the price to first of all do the low of the month. So we have to approach this with a lot of caution. On Nasdaq, what do I see? I see a fair value gap over here. Remember, I trust a fair value gap if it has got liquidity inside. So, but you are still reacting from here, from the low of the fair value gap on weekly. Let's check daily. Let's check if yes, previous day low was taken out, and then we had sell side liquidity on daily also being taken out. See this? This is the yes. This is sell side liquidity inside a fair value gap. Here you see. So it's the same thing that is happening on US 30. So we expect to see prices going higher, but we will not engage until something good happens, or what we expect to see. So this is it. You're supposed to go higher. Let's see what happened. Let's check on 4 hours time frame. But now the problem I'm having is all these strong bearish candles. You see, they have a different story to tell. That is why I'm telling you, I'll not be very quick to react. You see, I think trading on New York is not going to be easy, because price when the candle closed below the with the body, New York before New York we delivered on the drawn liquidity. So maybe we according to a system is just supposed to go higher. So let's just wait to see what happens. If I'm supposed to check 1 minute time frame, what's happening? Price is just dipping. You see. So we're just going to try to follow the narrative. Nothing much. We have a small breaker here. I don't know if price is going to respect that. So that is my bias. Price delivered before New York. So we wait and see. Hi guys, Jeremiah, our rock trader. Welcome to my stream. I hope I don't ban you today. So we continue. Let's see. Let us see what happens. Let us see. We're waiting. So on Nasdaq, on 15 minutes, what happened? In 15 minutes, remember 9:30 delivery has not yet happened. So I think that the price action on 15 minutes on this pair is messed up a bit. But I think there was a breaker that was formed and price is reacting from it as we speak because of the 9:30 delivery. So you see this one, this is a breaker. It's a small breaker, but it's still effective. It doesn't matter the size. You can see price is reacting from that. But let's wait for fresh conditions. But I just want to see prices going higher. If not, I'm not going to be taking a trade. Remember, I have to follow all the conditions. Price must reach a high time frame key level, or number two. No, you're not late. Top grades, you're not late. When on NAS is on weekly fair value gap. Yes. Remember, the price can do the manipulation. It can dig so deep and then close higher. You see? So the manipulation might be, yeah, let's just wait and see what happens. Stop trades, you're not late. It's good to have you. So everybody tell me where you're watching us from. So let's wait to see what happens. So remember, Wayne, what I'm telling you is the problem with what is it? Nasdaq, not the problem, but the thing is, yes, we are having a weekly fair value gap, and price is not reacting from there. Okay, price is supposed to react from there, but you see what I'm telling you is, if you see here, we still have some more unfilled fair value gaps on the downside. So the price might do whatever it wants. Let's just wait and see. You see, we have a fair value gap, yes, but we still have to wait to see. Let me check Dow. There's some sell side liquidity that I had marked. I see price has already violated that. Yeah, amazing. This is it. Perfect. So 9:30 delivery. That was amazing. So let's wait for price to come at the 0.5 level of the fair value gap, so that maybe you can look for longs. That is it. So I'll just mark the 0.5 level and wait for price to come there. So we're still going to be delivering lower. Let's see what happens. Remember, we don't take trades from the upper quadrant. I said that yesterday. That could be an institutional re-entry. That means the prices will always come and do its thing. So let's see if price digs deep up to this 0.5, and then we can look for longs. Yeah. And remember, we had this sell side liquidity inside. So let's just wait and see. Yes, it's good to have you, Sports Arena, watching from Eldoret. Yes, I'm waiting to see. Just waiting to see something meaningful as well. Okay, let's see this. Let's see how this goes. If I'm supposed to go bullish, maybe at the 0.5 level. Let's see. Let's just be patient, guys. If it comes to the 0.5, I'm also going to try take a trade, because it's only yesterday that I did not put a trade. Okay, I don't put trades on TradingView. My broker does not support that. I'm mostly on an Meta 5 on my phone. So that is it. Let's see what happens. Let us see. Let's wait and see. So whenever we have all these unfilled fair value gap, it could be tricky. But let's see if price by 950 comes at the 0.5, and then we can decide to long. You see, we have to follow rules. Even if we follow the rules and we get wrecked, that's okay. At least we followed the rules. That is it. We follow the rules. You see, the price does not do what you want. So it can come to your level and you can get messed up. The thing is, what makes you safe is just respecting your rules. We said the price must have reached a high time frame key level. Number 2, price must do a stop hand. Number 3, price will form a setup inside macro. If it doesn't happen, then I have no reason to take a trade. All right, let's see. Yes, I'm not sure how long I plan to stream, but you see, time will tell. So let's just keep waiting. Time will tell. So if you're supposed to get to the 0.5 level of the fair value gap, let's see if price reacts from this fair value gap over here. But well, still, let's just wait because 950 is not yet here. Where price will be at 950, that's when you're going to react. Yes. Let's just wait. Let's wait and see. We have patience in trading is like watching. Yeah, you need to have patience. Thank you for being locked in. The goal post. Yes, you need to be patient. Actually, waiting is like 90%. You have to be waiting. You have to wait for like, not like, you have to be waiting like 90% of trading is just patient. Waiting for trades to come to your key level. That is it. That is it. That is simply it. So we just wait, we wait, we wait, we wait. Can have some background music playing just in case, you know, in case you. So if you have some questions that you'd like to ask, I'll be happy to keep responding to them slowly as we go. So if you have some questions that you'd like to ask, I'm happy to assist as we wait for price to come to our key level. Yes. Beth Guitar, yes. What you're saying is true. Let me actually put your comment there. You need to be waiting. So we wait, we wait, we wait. Okay. Have you ever tracked the 90-minute cycle that ICT talks? No, I don't. My system, I don't do that. That's not my system. You see, there are so many things that I see talks about, but you know, it's you to pick what works for you. I don't trade that. I believe trading should be so easy. We are reacting from this fair value gap over here. Let's see if price gets to the 0.5 level, and then we can probably long it. I'll take a long today because of the fair value gap. So these ICT concepts works very well. You just have to be patient. Do 4 hours candle. Okay, do 4 hours candle give a narrative for you to take a trade. Okay, as we just wait for, you know, I might decide to teach and then forget that price will get to my key level, but let me just try to explain. How did you create your stream? I just created it. I just had the first thing is after you have some skills and you want to show to the world that you have something that works. I think the next thing is just do it with your computer. It's just as easy as that. So the 4-hour candle tells a serious story. You cannot afford to ignore the 4-hour candle, and whatever happens. That's what I was telling you. If you check this 4 hours candle here, you see it took out this low, but the story was so bearish. So what tells the story? It's the what? It's the body. So what do you do? If you're supposed to maybe take a trend continuation, you can come and subdivide your 4-hour candle like this. You see now, you see this candle now, the current candle that is currently in play went and rebalanced the equilibrium, the 0.5 level. That is why we're having a strong aggressive move. That is it. You cannot be wrong whenever you're using these stories. You see this candle was bearish, so closed below with the body. The next candle was like that. So you cannot afford to ignore these candles. I'm waiting to look for a buy over here, but I have to wait for price to generate generates liquidity and then take it out. So that is how I look at 4-hour candles, and that's how I feel. Even though me, that's how I use them. So that is it, when Paul. Unless you need me to explain in details, I'd be happy to assist, but we keep doing that. Please, can someone tell me if the music is loud enough? Okay, is it too loud? Is it is it interfering? Can people tell me, please, so that I don't have a noisy stream. So waiting. Okay, did you say create your system or create the stream? The system is, you see, what IT does is it gives you so many things. It's like being given the onions, the garlic, cooking part, maybe some meat, and then you ask, or just leave that. Actually, it's not even about, let me explain it in simple terms. You're given several types of liquor and you're asked to do a cocktail. So it is you to know what to mix so that you get a certain result. So ICT has given us everything. You see, it's you to make, it's you to experiment on anything, on everything, so that it gives you the best. You understand? So you can use the fair value gaps, order block, macros. So I just did it. I don't know how I did it, but it took time, over 365 days of serious watching, of serious studies. Yes, I'll check Nasdaq. It's cool. Okay. Why did you decide to trail your stop loss? When do you decide to trail your stop loss versus take partials early? I don't do that. My type of trading, what I do is I try to catch trades that come on a 4-hour time frame. I don't know if I should refer to myself as a scalper, but so this is what happens, Beth. This is what happens. This is what happens with me. I don't trail my stop loss easily. I don't take partials. That is me. We said everybody has got their system, so it's you to know how your system works for you. So I just wait for price to react from high time frame key levels, and I'm sure that I'll just take a reversal trade, a trade that is so high probability that I don't even have to put on break even, and I'm sure I'll catch 200 pips. That is it for me. If you align your bias with the high time frame, I think you'll not have problems with stop loss. I don't. If I change my stop loss or if I trail it, you know what happens with me? If I do that and the price takes me out, I'll start suffering from fear of missing out, because price will take me out and then go in the opposite direction. You see, that is it. Let me check Nasdaq for you. All right, thank you, Marizona. So let me check Nasdaq. Those are my rules. That is what I do. Okay, maybe Nasdaq has got a. Oh, there's nothing going on. This is just a sell that is in play. The best thing anyone can do is just tap into the move. But for me, if US30 does not come to the 0.5, or if it comes and does a setup and violates it, that is it. I close my wick over there. There's nothing that I can see on this pair on Nasdaq, because today I was planning to take a reverse. So let me just wait and see, because on weekly we said that the price, you see, we have this fair value gap. Price might end up violating it. So remember, we are still in deep premium. So we wait. So the macro is almost here. Let me check. So we are almost hitting the 0.5 level. That is why I plan to take my buy if it forms a setup. That is rule number one. So if it comes to the 0.5, that is the number one confidence on high time frame confluence. Number two, I also have this breaker over here. You see it? So this breaker aligns, the 0.5 of this breaker aligns with the 0.5 of, okay, let me see. It's actually at the 0.5 on this breaker, so it might go higher, but before my macro, I'll just want to see it maybe go lower, up to down here, and then we'll see. So remember, this is a breaker also. This is US30. This is also a breaker, and we have a fair value gap. They are coupled. So the sell liquidity was here. So let's see if price comes all the way down here, and then I can look for a setup. If I don't see a setup under those conditions, then I don't have anything to do. Marvin locked in. Yes, we'll be having Marvin in just a few. Monthly fair value gap aligning with weekly. Yes, on Nasdaq. Yes, but you see, it's going below the fair value gap. What I'm saying is the price, even if it might decide to go higher, you see, it can do a serious manipulation and leave a wick down there. So you just have to wait. I'm waiting for 950 macro, see if price will come on the weekly 0.5 level. It has already hit the 0.5 level of the breaker. So let me just wait and see if I get a setup over here. And then we're going to be having Marvin. I'm going to send him a link. We hope today we won't face problems with the market makers. Okay, let's just wait and see. Okay, they're asking, what are you anticipating, Marvin? Okay, let me check for you. So Nasdaq. So there's someone says that we have a fair value gap below the current one. Oh, you're talking about this one. Then you should be thinking about trend continuation. But then trend continuation, for me, I like seeing a stop point on the high time frame. So if you're supposed to wait for price to come here, how I would do it, is exactly what happened. Let me show you. If I'm supposed to wait for a trend continuation, there's no way you can catch this trade, might be. How I like doing it, if I know I'm supposed to continue bearish, it's so simple. I just wait for price to go to a 50-minute key level. You see, maybe there is nothing apart from this one. It happened quite early in London and came at 8:30. So there's no other way I would catch that move. To be honest, that is just me. So we just keep waiting. I'm waiting for Nasdaq for US30 to come to my level. So when Paul is saying that he's waiting to see price come to this fair value gap over here. So yes, we wait. I've not taken any trade, but I hope I take a good trade today. Unfilled fair value gaps, remember there are targets to be filled. Always take on your dealing range, you need to take trades from the most premium, most discount, fee level. So if you don't do that, you'll be wrecked. There's another fair value gap. Yes, I've seen it and I've posted it. Okay, we continue. We do. So let me see if yes that it doesn't do that, I have no business buying. So I'm just waiting. The 950 macro is here. Let me see if price comes down here. So normally the 950 macro is typically a trend continuation macro. Mostly that's what happens most of the times. So yeah, we are almost at the 0.5 level, the consequent encroachment. We are almost there. Like pips, come on, 50 and 56 pips. Let's just wait and see what happens. So I had marked a fair value gap that price is reacting from, but not how I like taking the trend continuations. You see this one, there's a small fair value gap here that price has reacted from, but it was outside any macro, so I would not have taken the trade as well. So I'm just waiting for price to come down here, and then I can decide to long. Down here, I'm waiting for a setup inside my kill zone. That will be it. We wait. Unless you have anything to ask or say, the best thing we can do right now is just waiting. Yes. So yes. So guys, you can support our live by liking, by subscribing. You can share our link with a couple of friends or some trading communities that you know of. So just to explain what I was saying, why the price is reacting bearish. Remember, we said the body tells the story. ICT said body tells the story, wicks do the damage. So let me show you something. So we said that in the spirit of body telling the story, we'll have 3 candles. So we have X, Y, and Z. So just to explain that this is X, this is daily time frame, X, Y, Z. Okay. So if you want to know your daily bias, this one is not 100%. It doesn't work all the time, but most of the time it works. So you can check this candle, see how the previous day low. You see, so this is the previous day low, like that. So yesterday, which is XYZ, so we have this X here, we have Y apple, and then we have today, which is Z. So in order for you to predict what Z will do, just look at how the candle closed. Look and see. The price came and took out the X low and closed below with a body. Remember, body tells the story. So it means now we have volume on the sell side. That is why you're seeing today expanding. You see, even if you just check here to just even here, let me show you. This happens a couple of times, and it doesn't work 100%, but it assists to give daily bias. So let me show you. Even here, I can see it. There is something that is here. Look at this candle and this one. So the price went below this one. That is why the next day we sold. Can you see this? This is a hack. You know. Look at this. We have X. We have X, Y, Z. So the price took out the sell side liquidity or the previous low, closed below with a body. Body telling the story. We are going below. That is what happened. So today price has delivered to our key level, to our drawn liquidity. So that's why I'm looking for a reversal. That is it. Even when you check all these, price trading above the previous day high and still going up. If you use that concept, you'll make so much money. So easy getting bias. All right, that the prince, our chef. All right, it's good to have you, Lord. Which time frame is the in the lowest time frame to the market respect? Bro, even 30 seconds. As long as you're in line with the high time frame, the price will respect your key levels. Doesn't matter which, as long as you're in line with the high time frame, price will always respect. Doesn't matter if it's 1 minute or 5 minutes or whichever time frame, 30 seconds. But I used 1 minute time frame. That is it for me. The prince is good to have you. We have Denzi. Trump imposed tariff here. The trade with yeah, definitely. I saw that. So I saw that on X. So that is how I like approaching price on daily time frame, apart from just looking at key levels. So let me mark my weekly fair value gap, see if price has gotten to the 0.5 so that I can decide when to sell, to buy. So the price has not gotten there yet. We have a couple of moves to wait for. So what I'm telling you on daily, you can even use it on you can even use it on 4 hours time frame. So there is a reason why price is currently doing a setup on US 30 because it's at macro. So let me try to see if the setup why I would try to buy from that place. Let me show you why. We have a weekly breaker on US 30. We are just trading. I'm trying to see if I can have a trade. Look at this. We have this breaker. The last order block, the last buy candle before the price went bearish, sweeping sell side liquidity. So if the price comes back, we're supposed to get resistance. Instead, what happened? Instead, price closed above the breaker. That is why we are having the price is currently at the 0.5 level of the breaker. So let's see the setup that is forming inside our macro if it plays out, or if it gets violated, we can decide to wait for. This is not a very good displacement. I don't like it. So I like to sing at least 2 to 3 candles closing above so that I call it as a good displacement. So I was hoping for price to close above here with 2 or 3 candles above, or present a fair value gap below here and then get violated. But let's just wait and see. So we wait. Price might decide to go lower. We're in the 950 macro. Mike Lolly P, good job. Okay. Your concept of bias. Yes, I'm going to repeat that. We have time. I'll repeat that. Okay. So I'm saying I like seeing displacement, like 2 to 3 candles, and then I like seeing price first of all having a fair value gap. You see, and then the fair value gap gets violated, then we can have a breaker, the order block instead. So we just wait. The 950, we are getting to 10. So I have to wait to see. I just have to wait and see. There's nothing I see on Nasdaq, to be fair. That's why I'm not even checking it. That is why I'm still here. Marvin will take you through Nasdaq. I'll give him the mic in just a few. He's going to be taking you through. So let's wait and see if price comes to this level and forms a setup. Yeah, I'm going to be repeating that concept on bias so that you understand it. Remember, it does not work 100%. There must be a narrative. There should be a narrative. So everybody, thank you for being here. Every person that is new, we appreciate that you are here. All right. Let's keep waiting. So just to touch on daily bias and what happens exactly, I would explain this on so just before price comes to the 0.5. I want you to check this. Let me remove this one just for a minute. Look at this candle. Look at this candle. So the price comes, takes out previous day high, or previous week high, you see, and closes above. Typically someone will say that price will see previous day high, previous session high, and then reverse. But whenever it comes to high time frame, if the body closes above like this, you see, this is a volume, the body telling the story that you are bullish. That is why you see price continuing higher like that, you see. So if for instance this week price closes below here, you're going to be continuing lower. So that is it. It's just a way of determining bias. So we are at the 0.5 level, and the candle 4 hours candle has closed, and I want to see that 4 hours candle low. So it has closed, the price closed here, the candle closed here, and then again, so this is the previous the 4 hour candle, the price has taken it out and it's gotten to the 0.5. So I want to see a price setup forming right now inside 950 to 1010 macro. If it doesn't, I will not take the trade, because I cannot take a continuation right now because of all these unfilled fair value gaps. You see, that is the narrative. So if the market has taken a bullish market structure shift and there is a bearish fair value gap just above it, which time frame are you talking about, Kelvin? Oira, if the price has taken a bullish market structure shift, what are you saying? You see, you need to explain very well what you mean so that I am able to understand. The thing is, price will form a setup as a trap. So that's why we are saying we have to follow the narrative. What is the story behind the candles? You see, for instance, this 4 hours candle, you see it has closed below with a body as well. So most probably it might continue lower. You see this one now, this one took out the low and closed below. That is why we're seeing this one continuing bearish. The same thing is happened here. You see, this is how the body tells the story. Price takes out the low, closes below. This one goes like this. That is it. But now we are at the 0.5 level. So the price might react from there or go down and react from the low of the fair value gap. You see, the weekly fair value gap, the high of the fair value gap and the low of the fair value gap, there are also key levels that you need to know. So let's just wait and see what happens. Now you see all this. The story behind is the price closes below with a body. It continues bearish. Like that, like that. That's how the narrative is built. I wish I was if the price has taken a bullish market. Is it take or has formed a bullish setup, and then there's a bearish fair value gap just above it? I don't know what you're saying unless you show me an example, Kelvin Mawera. So that is it. So I'm waiting to see now a setup forming. So we have an inversion fair value gap, a fair value gap here that has been inverted. You see it? So remember the reason why I'm trying to take this buy is because price has given me an inversion fair value gap inside my macro. So the price has retraced. I can put my stop loss down here, and then I can wait. So this is advanced market structure shift. The reason I'm taking that buy is simply because price has done a stop hunt first over here. You see? So I'm waiting to see if price will come back so that I can execute my trade. Okay, let's see. Remember. If this setup if this setup is high probability if it is happening inside macro 950 to 1010. So Price is not giving me an entry. It was okay. I missed it when I was trying to explain. So I want to see price going higher. You'd risk how much? 57 pips. That's quite something. I think the price is so volatile. Yeah. So let me just wait and see what happens. If it violates this setup, then I'm not taking any other setup. Yeah, I am not taking a setup if that one gets violated. So let's see if price goes inside there. If you are valuing up. So if you don't, so the thing is, you need to wait for price to generate a low inside the inversion, then clear it out, and then maybe go higher. But you need to wait and see. So this is the setup I will try to take, because that is it. If it doesn't play out, that will be the last setup for the day. Okay. So it's the consequent encroachment. Let's see what happens. Let's see what happens. So the risk right now is quite smaller. It's from here. Let me see. So the price is reacting from there. So this was an inversion. So the trade is inside my macro. So let me see how this goes. I'm waiting to see. So I want to see price now take out the low that it has generated and then go higher. So there is a low around the 0.5 level. So if it takes out the low and just goes below up to here, I'll be out. Yeah. So I would buy from there. If it doesn't, that is it. That is it for me today. If it goes below this low here, I'm violated. But remember, price is so bearish. I'm just trying to build a bullish narrative. And I'm trading at the 0.5 level of the weekly key level. Can give you love I have for lifetime. Nobody, baby, let me turn the lights off. Let's see what happens. Can give you love I have for lifetime. Nobody, baby, let me turn the lights off. Nobody can give you love I have for lifetime. Nobody, baby, let me turn the lights off. Nobody can give you love I have for lifetime. Okay. Shem says, Nas 1 minute inversion fair value gap naonaje? Let us see. So we have 86 pips up. This is a huge move. This is enough to pay bills for the weekend. Oh God, this is so amazing. So 80 pips move, it pips si kidogo bana. I don't know what you mean. That's what I'm saying. 86 pips. That price is so volatile, man. If you don't know what you're doing, you'll be wrecked. You require at most level of I can see Nasdaq also is forming a setup, but I have no narrative on Nasdaq, so I'm not in a position to advise anyone. So that is it. I was just taking a trade on US 30, and you can see it's going higher. Actually, it's I think at 100 pips right now. This is amazing. This is amazing. So we are at 101 pips. That is it. Let's see if price goes higher. So Marvin, I don't know what time you can start, if you can hear me. But right now I'm holding my break even because price has hit 100 pips. Oh wow. Okay, so if you are buying with you, please tell me if you are tape reading. If you are tape reading with me, you could tell me. So I'm holding break even right now, but price is still showing the willingness to go higher. So I don't take trades outside this macro. Once the trade has gone, I don't take re-entries whatsoever. So there's an inversion fair value gap over there. So price is still going higher. This is amazing. Wow, amazing. This is it. What are we doing? We are heading towards the moon. 126 pips, US 30. Awesome. This is it. We're doing it live, guys. So is it? You had 150 pips. It took a setup with me. I told you the logic. This is it. This is a success. 167 pips. Cannot even get this one on Nasdaq. You're in the trade. I closed my profits. 150 pips is not something that's so easy to happen in such a short time. So I want you to know that price is so volatile right now. So approach with caution. I don't take re-entries. I've closed my trade, but it's supposed to go up to here. So you see how we are able to catch very high quality setups using a very small stop loss. This would be like a 34, and then it goes to 160. You can do the mathematics and know how much risk that was. All right, Arizona, I'm out of the trade. That is just a prediction for me. Yeah, amazing. Thank you for this. So I'm going to be inviting Marvin. Okay, Arizona is a good what? She's so disciplined. She's been here. I hope it's a lady. I don't know. Arizona has been following us. Okay, that's nice. So let's see. Let me check Nasdaq. What's been happening? What's been happening? Not saying anyone should get into the anymore. going higher. You see, this is it. This is it. So Kimui, thanks. Closed Nimeto account drawdown. Okay, that's nice. You took the trade. Plus non breaker block 1 minute bado. Shemoweru. Are you talking about Nasdaq 30? What are you talking about? I wouldn't use the breaker, to be fair, because the stop loss is quite messed up. It's quite huge because the price is so volatile, unless you're talking about Nasdaq. I didn't take a trade on Nasdaq because I didn't have a narrative. I think we've had a very successful trade today. It's ending the week on a high note. As on a breaker on minutes. Coin Q, but okay, I'm not trading Nasdaq, so
nobody can give you love I have for lifetime. Nobody, baby, let me turn the lights off. Nobody can give you love I have for lifetime. Nitang'ang'ana na kama bado tai nitakazana, yeah yeah. Nitapambana na kama bado tai nitapull over, yeah yeah. Just hold me tight, I move you right. Nita feel so nice. Move your body, nikona money. I will spend on you. Fight nitafai kama kuna msana waste time. Take off your clothes, let's do it for the love. Song your close and feel my warmth. No to the phone, come walk to the door. Give me fortune, now we can play like a dummy. Say, nobody, baby, let me.
I don't know if my internet is messed up. Let me check.
Can give you love for lifetime. Nobody, baby, let me turn the lights off. Nobody can give you love I have for lifetime. Nobody, baby, let me turn the lights off. Nobody can give you love I have for lifetime. Nobody, baby, let me turn the lights off. Nobody can give you love I have for lifetime.
Going higher. Yes, that is going higher. Okay. So that is it.
Take off your clothes, let's do it for the love. Song your close and feel my warmth. No to the phone, come walk to the door.
So everybody that's watching, you can tell me something on the comment section. If there's something you'd like me to clarify, I'd be happy to help you. Okay, good. Sports Arena, thank you. 70 pips, you did it. We're happy for you. This was a nice trade, actually. This is a very nice trade. So it was a great trade. Can I trade London lows for DJ buys? We said Anthony Mongi, my good friend from X. So the thing is with London and London lows, Asian highs, Asian lows. The thing is that it's just a level of liquidity. So if you're able to use that liquidity to your advantage, that'll be good for you. So Wafula Herbert, I'm done. Good. It's good. On NQ Sports Arena, that's nice. Yes, I saw a setup on Nasdaq, but I didn't know the logic behind it. Though I was expecting a bullish. So you see the inversion that we marked. Well, I saw the trade late after it was around here, but I didn't know the logic. But there's this breaker here, so I'm not advising anything on that. So that's nice. So you can see price is going higher. Wow. I hope watu walichukua hii trade. Mike Lolly P, good to have you. I hope wase walichukua pia mimi. Kama wakuchukua, it's okay. Arizona Jerry, great trade. The merchants are winning. Of course, but we say this is what we do every day. You're always winning, eh? Yeah. This is what we do. Actually, my projection is almost delivering to the top. I'm a happy man. So we'll have more of this every day. So you just have to subscribe to my channel. Always be here. And you're gonna be winning every day. Maybe there's a problem with my internet. I don't know. So anyway, everyone can subscribe to my channel. You can follow me on X. I'm waiting to hear from Thanos so that you can know the way forward. Yes, Top Grade says USDT price movement is something else. Many pips. Yes, absolutely. My friend, even if you're looking for something like $10 with a small account, it's possible. I've done it many times. So that is it. I think this was a 200 pip move. The one you see, 209 pips. Only on USDT. Now you get to see why I love this pair. It delivers for me. Delivers very well. Yes, amazing. How many USDT has gone to 209 pips, risking like something like 30 pips. So you see how crazy this is. Yeah. Is the music still on? Maybe guys you can tell me. I don't know if the music is still on. Take off your clothes, let's do it for the love. Song get close and feel my warmth. No to the phone, come walk to the door. Give me fortune, we can play like a dummy. Say, nobody, baby, let me turn the lights. So I'm trying to call Thanos so that we can know if we can get into the trade. Oh, I mean, if you can have him. Hey, niaje utaingia stream? Oh, acha kutumia basi. Ngoja unirespondia hapo. Unaweza kwa WhatsApp. Acha nitumie. Let me invite Thanos right now so that he can continue. I hope the market makers will not do what they did yesterday. Okay. Take off your clothes, let's do it for the love. Song get close and feel my warmth. No to the phone, come walk to the door. What I fear on USDT is the stop loss. I just showed you how I manage my risk and how I get the sniper entries. What I showed you is a sniper entry. That was easy. That was quite easy.
Penda vile wanita king baby girl, I wanna give you love, it feels so right. And in the meantime you hold my heart, just don't forget who you are. Nobody, baby let me turn the lights off. Nobody can give you love I have for lifetime. Nobody, baby let me turn the lights off. Nobody can give you love I have for lifetime.
So
Nitang'ang'ana na kama bado tai nitakazana, yeah yeah. Nitapambana na kama bado tai nitapull over, yeah yeah.
you don't have to fear the stop loss if you know what you're doing. Easy. You see, why I have confidence in US30 is because I've tapered it. I tapered a very long time. So I'm not guessing on anything I'm doing because I have a track record of US30 performing. So I'm going to be inviting Thanos in the next. Yes, I've sent the invitation link to him. He's coming. Those that had questions yesterday, you can ask him today. Yeah. So I'm waiting for him to join so that he can continue. All right, Thanos, you're live. Take it away, bro. You're live now.
Take off your clothes, let's do it for the love. Song get close and feel my warmth. No to the phone, come walk to the door. Give me fortuna, we can play like a dummy. Say the way that you whine, girl.
Mzee, link yako unajua. Okay, fungulia mic sasa kwa sababu nimefungulia.
So can you guys hear me? So I took a buy. I took a buy from a breaker, the same concept that I use every day. So what happened is price had been dropping from 930, and then price dropped into, this is 11th, July 11th NWOG. So this price consolidated here and created some equal lows before sweeping deep into the NWOG. And then these three candles here, let me mark them properly. These four candles, 1, 2, 3, 4, the bullish candle, I marked them as my last up close candle before this liquidity sweep, as I have written here. So I was just waiting for price to close above the breaker, and then I took a buy here. This is where I took my buy, and then price has been riding nice, as you can see. So the most important thing is to find something that works for you and then do it over and over again until it is something that you'll be using all the time. You can see I'm targeting 930 highs, but I'm supposed to take some profits here, 70% of my trade. That is where I want to take some of my profits. So I believe I've shown you guys, I've been trading breakers over and over, repeating the same thing over and over again. And that is what I used to frame this trade here, as you can see. So I was I was on the stream and I've seen everything that Macolin has done. And it makes me feel good because I've walked this journey with him and I have seen him grow to where he is now. And that is a good thing. And the fact that he's giving that knowledge to you all for free is something that he is also growing. As he is doing that, he's also growing, because during my time when I was mentoring them, I did it for free. You can confirm that I mentored them for free, and in the process, I was also growing while doing that. So sometimes you have to give back to the society and grow, and someone will always pass it forward when you do it. So my trade is purely based on this breaker block inside the NWOG, and this being my price leg. You can see, let me show you. Remember last time when I taught you about dealing range, and I told you when you mark your where you are targeting your profit, let me show you. Your breaker should form on the discount side. If you're buying, now this is my target here. So from here to where price started turning, you can see my breaker has formed on the discount side of the market. So this is a high probability breaker. The fact that there's a few things. There's a liquidity sweep here inside a macro, and then the breaker has led to a liquidity sweep. And then the other thing is it's inside a higher time frame event. Like in this case, it's an NWOG. This is a new week opening gap for 11th. Let me first do something here. So this is the NWOG that formed on 11th of July this month, and you can see price has referred to it due to the fact that it had been left open. So two characteristics of this breaker have already been formed. That's a liquidity sweep into a higher time frame PDRA, and then close above it. The most ideal entry would have been on this. There's a small fair value gap here. So that is another characteristic that has fulfilled. And then the most important characteristic is, when is that order block forming? Like, for example, in mine, it has formed during New York time and inside a macro. So it has formed between 950 and 1010. You can see the whole breaker has formed 950 and 1010. That is when even the entry has presented itself. So this is a high probability breaker for me. And it's also happened after 930 manipulation. So my initial stop loss was here, just below the breaker in the opening. Sorry, yeah, below the breaker here. This is where my initial stop loss was. So I've just moved it right now, and I've taken some profits off, and I have to take it above break even to protect my position or the profits that I've already taken. So you can do this over and over again. And then when you're buying, for example, in this case, any bearish PDRA like this fair value gap, that I've marked here, it should become an inversion fair value gap like that. So any bearish PDRA should be violated the way you're seeing price do here, and they become inversion PDRA. This is an indication that your price will actually continue buying. In fact, I might move this position to London highs up here, because these London highs have been left. So I am thinking greedy. I'm content with what I'll get here today, being a Friday. if there will be a continuation in the PM session, I might take the trade. But so far so good. The breaker is high probability. And then if you look at maybe something like 4 hour, there's a 4 hour bearish fair value gap here. There's another one on the premium side. So even if the market wants to sell more, even if this market wants to sell more, if you take this to where the market is turning, at least it should come to at least 50% of this dealing range, which is above here, above the 4 hour fair value gap, maybe into this higher one before continuing to sell more. So that is how you use all those things that I taught you, that I showed you, the dealing range and all those other things to frame your setup, and the signatures that should support. For example, I marked this fair value gap. You can see it's supporting price higher. This inversion fair value gap should support price. The fact that price is weakening and closing above 50%, it showed even if price retraces down, this fair value gap will be inverted later to push price up. So somebody is asking, why did yesterday breaker fail? Which breaker? Yesterday AM session, which breaker failed? And did you align your breaker with the higher time frame PDRA? Governor is asking why yesterday's breaker failed. You cannot just pick any breaker. Go back to your charts, or you can show me which breaker you are talking about. We can go through it and we'll see if it met all the conditions to become a high probability breaker before you took that trade and it failed. And if it failed, obviously it showed that there was something missing in that breaker. Maybe it wasn't a high probability breaker. So there must be something, because the market is not always wrong. The market is never wrong. You're the one who is wrong. There's something you were saying yesterday. That is what he is saying. Oh, I remember. So I can't remember where we were unless you guys take me back to what I was referring to. But I remember well. I wanted to talk about why a certain breaker failed, and the reason must be in one of the reasons I've just given you now. Because what I wanted to tell you was what are the high characteristics of a high probability breaker, and I've already told you a high probability breaker occurs after a clear market structure shift, usually on higher time frame level. And then another thing, it occurs after a liquidity sweep before breaking of structure. So this is a liquidity sweep before breaking of structure above this swing high. So this is a high probability breaker, and this liquidity sweep must lead or enter into a higher time frame PDRA. In my case, it's an NWOG. I don't know. I've been having this NWOG on my charts for a long time, so I don't know what other PDRA is on the left side. And then the other thing is, if you're selling, your higher probability breaker should be on the premium side. If you're buying, your high probability breaker should be on the discount side. And it's the same thing I've done here with the dealing range. You can see I was buying, and so my high probability breaker has formed on the discount side of this dealing range. If you are selling, your breaker should be on the premium side of the dealing range. So that is another characteristic. And then ideally, and this is something I've been observing, your breaker should overlap with a higher time frame order block or fair value gap or a gap. For example, you can see this breaker is forming inside the NWOG. NWOG is a very big gap. it's a weekly gap, so it's a big deal in the market. So the breaker is overlapping inside a higher time frame gap, in this case, which is an NWOG. It can be inside an order block or previous day, week, month highs and lows. So that is another characteristic of a high probability order block. So when you have those characteristics, you can always have red flags. Like if those characteristics are not met, that is a red flag that your breaker is going to fail. For example, some people will be looking for breakers in a consolidation. If the market, let's say for example, like this type of consolidation here, someone will be looking for a breaker inside a consolidation. So your breaker cannot form inside a consolidation. It must form when price is making moves. So one of the red flags that I usually consider that this breaker is not high probability is if it's forming inside a range or a consolidation. And then another thing, if there is no such displacement like this away from the breaker, that is another red flag in that breaker. So once your breaker formed, your price should not stall here, consolidating around here. Price should run away from the breaker. And what I usually find price doing is it will do something like this and then consolidate here, then later fall back into the breaker. Something that like that has always been happening. Maybe it's even what wants to happen here, and then continue buying. So that is something I've observed from my journals over and over again. Market will move away from the breaker aggressively, the way it has done here, and then after moving for some time, it will drop sharply into the breaker. Now, when it drops back into the breaker, it should leave the breaker immediately. So even me trailing this stop loss is risking that break, but I don't mind because I can always take a re-entry from here because it's something I've observed price doing. So another red flag is if your breaker forms and the market stalls here, like in consolidation like this, most probably you're going to be cooked by that market. So your breaker should really push price immediately, the way this one has happened here. So this one for me is a high probability breaker. And even if this price comes and takes me out, I might make a re-entry going back into my initial target up there. So, and then another thing is if there is no liquidity on higher time frame PDRA, that can be another red flag in your market when you're using a breaker. For example, I've seen Shadi has shown you NQ and ES taking higher time frame liquidity, and the breakers have formed after those liquidities have been taken. So those are high probability breakers because they are forming after liquidity sweep, or not necessarily liquidity sweep, or market entry into a higher time frame PDRA, the way this one has entered into an NWOG, something like that. And then if your breaker doesn't align with your higher time frame bias, that is another red flag also, because it should align with your higher time frame bias. So that is another thing. Your breaker should align with your higher time frame bias. Another thing, for people who see breakers everywhere, you should not see tiny breakers in the middle of lower time frame. So if you're on 1 minute and then you see everything as a breaker, not a clear one like this, if you look at this price action here, there's no other indication of a breaker here. So if you see some tiny breakers everywhere, that one is a red flag in that market for low probability breakers. So you can choose one thing and stick to it and be learning from it, be it a breaker, a fair value gap, because this is also 2022 model. price swept liquidity sweep. This is the swing high here. Let me remove this. So this is a swing, this one here. You can see this is a swing. So price swept liquidity into an NWOG and then closed above the swing high. You can see, and then formed a fair value gap, retraced into the fair value gap, and market is now buying. So this is also something else. You can always use 2022 mentorship without even using breaker, but I've always found that fair value gaps that align with order blocks or breakers, they usually become very, very, very high probability. They usually become very, very high probability. So I usually look for, there is a fair value gap here, yes. So is there an order block like this one that pushed price down to sweep this? Yes, there is an order block. So for me, even this fair value gap is high probability or this due to the fact that there's an order block that pushed price down here before we started buying, and this signified market reversal here. So that is the entry model that I use, and I use the same thing over and over and over again. I usually don't use anything else. So unless anyone has a question. My entry is based on price hitting a higher time frame PDRA, which is this new week opening gap that formed on 11th. So a little bit of consolidation happened here, and then market looked like it was buying and then pushed price deep into the NWOG. So these candles, the ones that I've marked here, the green ones, these ones, they are an order block that pushed price, sweeping these lows they created on the left side, these ones. I'm referring to this, let me show you. I'm referring to this candle, 1, 2, 3, 4, the whole of this series of candles here. This is what I'm referring to as my order block. These ones, those ones, the ones in the dark here, those are what I'm referring to as order block, because they are the last series of up close candle before price pushed down deep and sweeping these lows it has formed here on the left. So this is what I've marked. Let me show you that one, those 4 candles. These ones, these 4 green candles, they are the last up close candle before price swept these lows on the left deep into the NWOG. So this is what happens when your price is here, you wait for your order block to be violated, the ones you marked as an order block. And that is why I always say order blocks, breakers are failed order blocks, because ideally this is what should happen. This is an order block, so market should come back here, and then the order block should continue to push price down like that. But then when an order block is violated like this, the way it has happened here, now it's like an inverted order block, which is now a breaker. It's a failed order block. It's an order block that has failed to serve its purpose of pushing price down. Instead, it's now inverted into pushing price up. So that is what we call a breaker. For some people, like ICT has always thought a breaker for him is a pattern which will start with a high, a low, and a higher high. So for ICT, a breaker looks like this: a high, this high here, a low, and a higher high, and then retracement into the breaker. And I think that is what is happening here. Price wants to retrace back into the breaker before buying more. But for me, I chose the specific candles because he has also shown the specific candles that that form the breaker. They are the last up close candle in a buy market and last down close candle in a sell market. So that is the entry. When the order block fails and it is violated, you now use it to enter the market and into the nearest PDRA. For example, this high or this fair value gap would have been an ideal entry for this buy. But then these are also liquidities that are up here, which the market might go to later on during the day. So that is the entry model that I have used. Can you still use the breaker on PM session if it won't be tapped? Let me kindly point. I've pointed to the candle. What time do you start framing the trade and entry time? I usually come back to the market at around 8:40. So because I'm usually not interested, if this fair value gap is violated, I might exit the position and wait for the market down here for me to enter more buys, like the way it's happening now. So because this fair value gap supported price here, and I know the market is coming back here, you can exit whenever you see your PDRAs being violated. But since I have taken profits off and I've trailed my stop, I have no problem with being stopped out. So the person that is asking what time do you start framing the trade and entry time? I usually come to the market at around 8:30, and then I have to look at 4-hour time frame. Like, what is the market doing on 4-hour time frame? For example, in this case, when I came into the market, this is the candle that was playing, the 4-hour candle, and I was waiting for it to close the way it has done here. So once it does that, what do? You come and mark the PDRAs that are inside here. For example, I have marked this 4-hour fair value gap. This is another 4-hour fair value gap. So I'm expecting a retracement, and this 4-hour fair value gap aligns with this order block here. So I'm expecting price to retrace back into this 4-hour time frame. The most important thing in the market is to know where is your liquidity, where is the market going to. Your entries should not be a problem, but knowing where the market is going is the most important thing in the market. Once you know that, you can now start framing your entries without being afraid that the market is going to take you out, because even the market can take you out like twice before you get an entry right. But is the direction you're trying to enter the market to targeting, is it the right direction? So the most important thing is knowing the next 4-hour candle is going to retrace into this gap here, the 4-hour fair value gap. So all you have to do is wait for an open, the way you see here. You have to wait for an open, manipulation, and then price starts buying, and you have to frame your trade down here. So that is the most important thing. Entries do not matter. As long as the market does, as long as you know where the market is going, entries do not really matter. That is the most important thing. So the next question, someone is asking me, so I start from 4 hours and then I drop to 15 minutes. My targets are usually based on 15-minute time frame. That is because I'm trading on 1 minute. I usually have my targets on 15 minutes. For example, these are smooth highs here. This is a smooth highs here, and there is a 4-hour fair value gap, but in 15 minutes, these are gaps. So these are very smooth target here on 15 minutes. And then I use 1 minute to frame my entry so that I can get stop losses that favor me. Some people cannot trade on 1 minute time frame, and it's understandable because most people consider 1 minute time frame as noise. But then once you expose yourself enough to the charts and videos, especially 2023 and 2024 mentorship, you'll understand that market is fractal. What happens on daily, 4-hour, 1 hour, 30 minutes, all the way to even 15 seconds, it's the same thing. If there's a fair value gap on 4-hour, there's a fair value gap on 15 seconds and all those time frames. So you must trickle down from 4 hours, 1 hour, you go on marking the PDRs, but then most PDRs I mark on higher time frame, and then my targets are based on 15 minutes because I consider myself a scalper. How many macros do you trade? I only trade 2 macros or 1. Like if I've traded this macro, unless I'm trading continuation, and now this is, as you can see, this is $10.50 macro here. I was trading a continuation and this breaker was not here, I would consider buying more from here. But then since I'm not interested, I'm waiting for the market to come back into this breaker, I will wait for it down here. And another important thing, but this one I want you guys to go, people who trade macros, I want you to go and back test and forward test them by yourself. Called macro manipulation. So what happens if your macro, like for example, you can see this is 950 macro. So I've always observed that if you're on buys, market always manipulates below the macro before buying more. So as you can see here, market created some form of liquidity and then manipulated below the macro before buying. Now look at this. We are on a manipulate below the macro before we buy more. I don't know what has happened. You can see market is already starting to manipulate before the below the macro before we buy more. So I've always observed that macro manipulation happens, and that is something that is you can backtest on your own, come up with your own data and see if that happens. Can you still use the breaker on PM session if it won't be tapped now? In fact, you will find in most cases during PM session, market will refer to the breaker or the PDRs you used on the AM session, like first presented fair value gap, such a breaker like this one that I have marked here on during PM session. If let's say lunch lows, the lunch hour range forms around here and you are buying, we said if you're buying, the lunch lows should be taken first and then you buy towards lunch highs. You might find that these lunch lows being taken, price might manipulate all the way to the AM session breaker and then form another setup like this one inside this breaker before you buy. So you can use the PDRs you used on AM session to frame frame buys again, and market sometimes refers to those PDRs that you used on the AM session. In a PM session trade on Friday, if the lunch high is taken late, do you take the trade targeting lunch lows, or do you assume that the market is returning to 30% of the candle? It will depend. For example, you cannot just enter the market blindly just like that. If lunch, but it all depends with where was your target during the AM session. Has it been hit? Has it been hit? Let's say, for example, you are targeting these highs here, this one, this 930 high, and then this market consolidates here. Even the lunch hour happens around here. Let's say this is lunch hour range here. So the market did not hit your higher time, your earlier target, the liquidity that you are targeting. So when there's consolidation here and lunch lows gets taken, and my AM session targets were not met, I'll be comfortable taking this trade towards my original target during the AM session. So yes, you can still buy more on Friday while still expecting a TGIF if liquidity was not met up here, and that liquidity is high probability. So you can do that. Do you factor in time? The most important thing is time. Before you even start thinking about price, the most important thing is time. I cannot trade, and that is why I cannot trade before New York session is here. So time is the most important factor. Does it mean that breakers don't have to be retested? Personally, I was waiting for the retest, but the retest is happening now, and it has happened. This is a retest of the breaker, so you can buy this market more if you are interested. So, and I have just explained that the market does something like this, consolidates here, and then back into the breaker. But for someone else, someone like me, let me show you this close here and this candle touching the breaker, having a very small fair value, reason enough for me to take trade. But then this is now the retest of the breaker. So I can comfortably, and you can see there is a fair value gap inside the breaker, this one. So I can comfortably wait for price to hit the breaker and then you buy more. In fact, during my early years, I would wait for something like this and only target these new highs that have formed here and exit the market. So this is now the retest of the breaker. Austin is asking, does it mean the breaker doesn't have to be retested? It will always be retested no matter where the price go. Even if this price leg hung all the way to up here, it would still have retested this breaker the way it has done right now. Take us through PM session. When do you look and the macros time that you execute a trade? I don't know if I took a trade yesterday on PM session. I'm not sure. Let me see. But then during PM session, I explained what you look at. For example, let me go to 5 minutes. Let us look at Thursday, yesterday's PM session. If you look at this price action here, where is the lunch hour? Let us mark the lunch hour. This is I explain what I have done. Now this is a PM session trade. No, this one is not clear enough. let me just go back to the charts. This one is not showing me what I want. So I'm looking for a PM session trade over here. Don't know if I'll find one. So this is noon to 1:30 exactly. Let us use this price action here. So if you look at here, this is noon. This is noon starts there, and then 1:30. ICT says that PM session trade usually runs from noon to 1:30. So if you look at this trade here, and you want to trade the PM session, so what you do is you mark the lunch highs and lows. For example, this is the lunch high here, and then this is the lunch low on this candle here. Let me exit this. This is the lunch low here. I don't know how many pip range is this. It's too small, but then it's just an example I'm showing. If you look at after 2 p.m. is here. So what happened at 2 is market came and took out the lunch highs, and then there is a setup here sold to the lunch lows and maybe targeting these liquidities down here, as you can see happened here. And this is something I want you to test. Go to your PM session, mark every lunch high and low between noon to 1:30 that happened, and then observe if price swept one side before dropping down to the other side. And especially, you align it with your higher time frame bias. If you're buying, let's say you are buying, you are selling this, the market will consolidate and then sweep. If this is the lunch hour liquidity and you are selling date, in a perfect market, it will sweep the highs of the lunch before dropping or continue to sell. I look at PM session, and it must align with the higher time frame bias, especially after 2. Look for trades after 2 p.m. That is when you will find the most high probability trade when you're trading the PM session using higher time frame bias. If you're buying, you should use the higher time frame bias to buy the market, to continue buying during lunch hour. So next question, what things should happen for you to trade during London session? I don't trade London session, but if you want to trade London session, come to Asian session. For example, Asian starts at this is Asian session. Let me mark I don't know what's happening with my internet nowadays. It's loading. But come and mark midnight if you are looking to trade Asian session. Come and mark what's happening. I don't know what's happening with my internet, guys. Okay, it's here now. If you're looking to trade Asian, you usually come and mark midnight like this, and then 2-7. This is the Asian session here. So what I usually do is I mark the Asian highs, 7 to midnight. That is the Asian highs, and then mark the Asian lows here. If you want to trade London session on a bearish day like today, normally what should happen is London session should take Asian high, and then you will find something like this which has a fair value gap for you to now sell the market. So you look for a sell setup. And if you are bullish, Asian low should be taken, and then you look for a buy setup. But I don't trade London session. I've always been wrecked every time I want to trade Asian session. I don't know what happens, but I'm always wrecked. Say something about what about time in and out? I don't understand trader cheats, what you're saying. What about time in and out? I don't understand what you mean by time in and out. Say something about 10 a.m. candle. So I usually trade the 10 a.m. candle, and this is what happens. I'll come to 4 hours like this, and then I'll look at what the market has been doing. For example, if you look at this, our case here. So in your candle, this is the last candle before we start the 10 candle. Now, if you look at what I did here is, let me delete everything. Once this candle closed, the first thing I did is I marked this 4-hour fair value gap here. And then I looked at what has this price leg done. So all this liquidity has been swept into half of this week, this 4-hour week here. You can see into this week. And we said weeks are gaps. If you drop to lower time frame, this is there's a whole gap here. So I am anticipating this fair value gap to be filled on 4 hours. So I will now drop to lower time frame, like 15 minutes, and maybe observe what's happening. But most importantly, 1 minute. And the 10 candles started here. The 10 candles started there. You can see this is where the 10 candles started. So there's liquidity here on the left, this lows here. And I had marked, once the 10 candle sweeps this liquidity, this is my order block. It's the same thing I'm repeating over and over again. So open of the 10 candle, you can see the open is here. Manipulation as expected, close above the 4 consecutive candles that were my order block. And then once close above, I took a trade from around here. So the 10 a.m. candle, you first identify the higher time frame buyers, and then are there gaps left? For example, in today's trade, we have traded the opposite direction because of filling of a gap. So we've done filling of a gap, not aligned with the higher time frame buyers, but because there is a 4-hour fair value gap, which really should not be left, that is why we took a buy like this, the one we've taken here. So this is the open of the 4-hour candle. Manipulation taking this sell side liquidity into the new week opening gaps that I had marked here. And when market closed above, that is why I was comfortable taking this buy, this one. I was comfortable taking this buy. And if this breaker still holds price, I would be comfortable taking another entry. But for me, once noon is here, I don't take trades again. I wait for PM session to play out before I decide to take a trade again. So whether you look at price on the higher time frame, on what time frame, your entry model should be the same. How do you use how do I use the least stop loss possible? Because I realized it's affecting my RR. So the thing is, you cannot be perfect in placing stop losses. For example, when I took my trade here, my initial stop loss was here. This is an order block, so it was below the mean threshold of this order block. And according to the stop loss that I used, this is more than $2,000. But then again, if my stop loss is here and my entry is here, if you look at the RR from here, if I get at least 1:3, you can see this is 3 RR. I'm comfortable with that because this is where I took most of my partials, and then the other ones I took here. So this is something that is comfortable. You cannot have stop loss in the market. Setup is okay. Even having a stop loss down here is perfect, as long as your model has played out and you know that the likeliness of the market going back to your stop loss is close to 0. For example, if I had taken my trade here, and I have my stop loss somewhere here, like that, my whole setup is banked on this breaker block here, this one. That is where my whole setup is banked on. So if I took a trade and this market did something like this, that means this breaker has been violated back into being an order block. I am even comfortable exiting this market here before it hits my stop loss until the market comes again above my breaker, and now I can take another trade. So it's not a matter of you having a tight stop loss. You can enter from here and your stop loss is here, but as long as your breaker holds price, you are okay. If it gets violated and there is no PDRA down here, for example, if I was to exit, I would look at this candle. You see this one? So I can assume market is coming to half of this order block, and then it will go back to above the breaker. But then if something like this happens, the market comes here or below the order block like that, or below the half and closes there while strongly bearish, I am comfortable exiting this market even before it comes to my stop loss. So you have to know when is the market giving you what you expect. I can even enter the market here and have my stop loss here, but as long as my breaker is being violated, that is not a high probability market, and I will cut my losses and accept, because accepting losses is also part of the game. And that is why I had my stop loss here initially, because I know if price closes down here, this breaker is not high probability anymore. I have to wait and see what the market is giving me anymore. How was your risk interview with Alpha? Alpha banned me. I requested 68K from them, and they came up with flimsy excuses that I was doing group trading. I trade alone, solo. I don't even have a Telegram, WhatsApp, or any other thing, or someone we share signals with. So, but the risk interview, they'll tell you to open a trade, and they want to assess how you place your, and the first thing, start with placing a stop loss. Otherwise they'll say, oh, you cannot take profit before you do a stop loss. They do those kind of things, but for me, they banned me. Is there a macro for the PM session? Yes, 150 to 210, 250 to 310, and then 350. The last hour macro, I think it runs from 345 or something. ICT said something like that. How do you know the daily target has been reached during PM session? So this is what I'm saying. Let us assume, I want to show, let us assume this is your target here. And a higher time frame PDRA has been hit the way it has happened here. And you want to take, you have taken your trade here, and then the market buys, takes out this low, and then
think we are having a matrix attack. Just tell me if you can hear me as we wait for Danas to come back.
I think the sound is me not talking, but I think I'm busy. Can you hear me now? I don't know what's happening, guys. So there's no sound. See, what about now? Someone had asked me if reached. So what I am saying is, if this is your target up here, I think the sound is. If this is your target up here, I mean, let me see. If your target
All right, it's another matrix attack. Let's see how this goes. Okay, let's just wait. We can have some music as we wait for him to probably join.
Can give you love I have for lifetime. Nitang'ang'ana na kama na kama bado time nitakazana, yeah. Nitapambana na kama bado time nitapull over, yeah.
Just hold me tight, I move you right. Need to feel so nice. Move your body, nikona money. I will spend on you. Find it a fight, kama kuna msana waste time. Take off your clothes, let's do it for the love. Song get your clothes and feel my walk. No to the front, come walk to the door. Give me for finger, play like a dance. Say, nobody, baby, let me turn the lights off.
So what I'm saying is, if your target is up here and market has done something like this, and then lunch hour consolidates around here, for the person who asked me, how do you know your daily target has been met? So if this liquidity has not been met by 12 and lunch hour has consolidated, you cannot look to sell this market. What you'll do is you'll wait for market to sweep. You'll wait for lunch hour to play until around 2 p.m. Wait for the market to sweep one side, maybe into a PDRA, like this order block here. So something like this will happen. And then you will now take your buy going back to your target, because the market has already shown you that it was coming to sweep this liquidity, but then the objective was not met by the time lunch hour was playing. So during the PM session, you will now complete this objective. And in most cases, at 2 p.m., during the PM session, when the objective I was aiming for has been met, I usually don't take a trade, or I'll just trade this range here, wait for lunch lows to be taken, then trade to the lunch highs, na nifunge siku hivyo, and then I close my day like that. So that is how you know your objective for the day has been met. If it has not been met, you can trade it during the PM session. And sometimes a day like today, even being on Friday, the market can even close your objective, and you have to wait. You have to wait next week. So if one macro fails, do you wait for the next one, or you're supposed to have enough for the day? So this is what happens with the macros. When one macro consolidates like this, let us assume this is a macro. If this macro consolidates, let's say 1050 to 950 to 1010, if it consolidates, most likely the other macro will expand towards what you're aiming for as your target. I've always observed something like that. When one macro consolidates, let us look at what's happening now. So 950 macro expanded, and look at what is happening on today's 1050 macro. It's basically consolidating. So this market might stay here, consolidate here until the next macro, which is 1150. This one. That is when maybe the market will now start expanding. And this is something you can observe if this chart is going to like stay here. This macro is consolidating. This macro expanded. This macro is consolidating. The next one might, maybe there might be even equal lows in the macro consolidation, then sweep deep into the breaker and this fair value gap, and then that macro will now expand. So when one macro consolidates, the other macro usually expands. So yes, one macro can consolidate and the other one expands. Someone is asking me, how do you journal your trades and emotions? the most effective journaling that I have done is when the trade is in play. Like for example, when we started this chart, you saw I had journaled here. I was writing what I'm doing and how I've taken my trade and those kind of things. Let me show you something. If you look at, I have something here I want you to look at. If you look at this, let me open this two charts. If you look at this chart, this is a trade I was taking on this particular day, and you can see this is what I was journaling. Market swept all-time high liquidity, and I expect a form of reversal. I marked the 5-minute order block, turned breaker. Also, ES failed to sweep all-time high, creating an SMT. And then you can see here I'm writing, I'm feeling relaxed because rules have been followed. And I believe this trade played out. This trade played out. And now I transferred that to here. You can see this is my trading journal. This was the second trade of 200, 24th. This was on 24th. Time taken was at 4:10. So this is New York session. The pair is not Nasdaq, sell, and all those kind of things. And then, but I later eliminated this entry and stop loss stuff. So you can see, taken according to plan, explain. Now, what went well? When it gets to this point, I'll come back to my chart here. I'll come back to my chart and observe what I wrote, how I was feeling during the trade. And then that is what I'll now come and transfer here. And you can see the trade went well and I got stopped out on a trailed stop loss. Time factor, what to improve, time factor watch, market was about to close. You see, pre-trade feeling, calm, emotionally detached due to partial and risk of partner. Factor. During trade, I was patient. After result, relaxed, but I knew the problem was time. Notes on feeling. Since trade was well risk, I did not feel emotionally disturbed. Lesson learned, I should stick to taking trades only during New York kill zone. So you can see the most effective journaling that I did is, I journal when the trade is playing so that I can be able to transfer how I was feeling during this trade into, and this only happens when I'm testing the model, into let's say, let's do another one like this one. You can see I have written what was going on, and then the market played well, trade played successfully, and then I came to my journal and I transferred, this is model, this is test 9. I transferred the whole thing into the trade that I was taking during that time. So the most effective journaling for me is when the market is playing, because I'll be able to record my emotions. How do I feel at that particular time? What are the emotions? If I see market retracing, for example, in this, and I am not sure where the market is going, I told you this market is coming back to the breaker. So if I see this retracement, how is it making me feel? I'll write it down here and then I'll later transfer it to my journal. So I find journaling while trading as the most effective thing I've done of late. Until when will you invalidate your bias? I'll invalidate when this breaker gets invalidated. So the entry model that I'm using is I'm banking everything on this breaker. Once it gets violated and this low gets taken out, I am out of the market and I am not interested on what the market is going to do again until it gives me another breaker or comes back to refer to this and then uses it to support price. So I usually invalidate invalidate my bias when my PDRs, the PDRs that I expect to support price, like this breaker, they are not respected. So that one, you cut the trade and then you sit and watch and see what the market is going to give you next. Placement, assuming there was a fair value gap below your breaker, do you treat the fair value gap as a breakaway gap, or do you treat it as an invalidation of the breaker if price comes back to it? There is one here. You can see there is a fair value gap here and it had not been mitigated. But then if I entered here and this happens sometimes, if I entered the market here and then it came down to fill this fair value gap like this, the safest way for me to know that for sure this market is going is me wake me out. Can place it here. But at this point, if the market was coming to fill this fair value gap, it would have stopped me out here. But because my trade was risked, I have no problem with that. The safest way for me to enter this market again is wait for it to come again above the breaker and then retest it, due to the fact that down here, the market has already retraced into these fair value gaps. Why this market should come down here again after coming back on top of the breaker again. So I'll be comfortable taking another long here after the market has taken me out here, because it was coming to fill this fair value gap. Or if there is a fair value gap, a significant one, let's say like a big one like this one here, I will usually wait to see if price will come back to it and then come and violate the order block again to become a breaker. But then if I was waiting for price to come here and then it does something like this, I have no problem taking a trade from this fair value gap rather than taking a trade here and then it stopping me out. Instead, I would have waited for a fair value gap to be taken out. But then another thing that I consider while trading this is our inversion fair value gaps. If this is a BPR, if this was a sell side imbalance and a buy side imbalance on this side, I'll usually take my trade from here because I don't expect price to drop back into the BPR. So sometimes you get stopped out here and price was coming to fill fair value gap, but I usually feel like the safest way to go back into the market is to come back above here and then retrace, and then I'll take my buy from there. There are some things you cannot prevent in the market, like being stopped out. Kuna DRT ya internal liquidity, like unapima the range yenye imesweep. I don't understand what is that. Samuel, I don't understand. So I think we've discussed enough. I don't see any more questions, so we can call it a day. For me, if I'll re-enter this trade, but I'll wait to see what the macro will do. I'll take a trade on this. Again, I'll buy, but I will wait for the macro. This is the macro starting here. I've marked. I'll wait to see what the macro does before I buy again. So you can see this macro is already consolidating from 1050. 1050 has been in consolidation. 1050 to 1110. You can see it's making price consolidate. So I'm waiting for the next macro. If this breaker is not violated, I'm going to take another long to my original take profit. But as it stands now, my day has been profitable thanks to knowing how to take partials. As a trader, you should always pay yourself first before anything else. Based on your journal, what are the 3 hours? What are the mean threshold? No. 3 hours. What do you mean by 3 hours that the setup present itself? I usually trade from 10 to 12, 10 to 11:50, and then I stop for the lunch hour to play out. Limit orders. I enter the market direct. That is why I'm usually active during New York session. I'm seated in the charts observing what the market is doing because I want to take trades by myself. I've already explained the macro. I don't know if you are here. I've said you can see during the macro is when price formed this setup and then expanded. This is the other macro which has made price consolidate. We are now going to this one. So this price is now expanding. If during 1050 macro the market comes back to this fair value gap, I'm going to take more longs into my original target. So that is how you using macros, because to chase this price, I cannot enter this market here. But the macro can help me. If it drops to somewhere here, I can take this trade here and even place my stop loss just below the mean, the half of the breaker here, and I'll be comfortable with that. So I think that is all for today, guys. And just find one model, use it over and over again, collect data. I have in my journal, I have thousands of journals that I have collected, and that is why I am able to know what the market is doing at specific time. So what you can do as a trader who is developing, just lock in, find one model, use it all over, like test it over and over and over again until you know how the market behaves. You remember when the market was here, when the market was here, I told you it's coming back to the breaker, and that is exactly what has done, what the market has done, and it's now buying towards. And I'm telling you, I might use the macro to enter this market again. So the reason why I told you this is because I have seen this. I have seen it a lot of times. So that is why I am able to know that the market wants to do this at a certain time. So just find that one model, repeat it over and over again until you can know what the market is doing at a particular time. And you don't have to like listen to people. You just concentrate on your model. You will see me trading breakers. Maybe you trade the 2022 mentorship. Maybe your trades are only based on entering from a fair value gap. Don't copy what I'm doing. That model which you're using, use it all over again, and then you will grow discipline and everything out of that. And once you are confident with your model, once you're confident with your model, you will not be swayed even by any other person when you see them trading and their model is playing out well, because you have tested yours and it's already working for you. So that is one thing that you should be able to know. So guys, I think that is all for today. You stick to your system, accept boredom in execution, journal your trades with brutal honesty. If you made a mistake, don't blame the market, don't blame the news, don't blame anything. Be very brutal when you're journaling. So that is all for today, guys. I'll give back the mic to the owner.
All right, thank you thank you, Thana, for that. That was a great stream. So we do this same time, same place on Monday. Uh, right? And just to show you what happens to ES30, just so that before I end the stream, let me show you what happened. That was a very nice presentation from Marvin. So anyone who has been struggling, I believe now you're finding a
song get close and feel my warmth. No to the phone, come walk to the door. Give me fortune, we can play like a dummy. Say the way that you whine it, girl. I can't believe I was like it, girl. Come on, you that don't you whine it. You love me no way to do want it, baby. Baby, give me love for tonight.
And,
you got me tripping every night, me straight for the night.
Just
Give me
subscribe.
good summer love. And text about me, my soul and my mind. I need a king, baby girl. I wanna give you love. It feels so right. And in the meantime, you hold my heart. Just don't forget who you are. Nobody, baby, let me turn the lights off. Nobody can give you love I have for lifetime. Nobody, baby, let me turn the lights off. Nobody can give you love I have for lifetime.